What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we are going to be covering the SoFi stock and the overall market. We took about 4 days off for the longer weekend, but now we are back, and these big moves that are coming inside of September are coming very fast. We're going to be covering those important dates to remember, and we're also going to be covering the SoFi Cnbc interview with Anthony Noto. The dude is coming out for you to defend the SoFi stock. He's not giving the bears any wiggle room. He's talking about the consumer spending, deposits, credit card delinquencies, personal loan delinquencies. The dude is coming out and defending you heading into the Q3 earnings, heading into the massive, Fed rate cuts, guys. The guy is not trying to back down from these bears, guys. Just like we saw in that Q2 earnings where the dude went absolutely insane at the end of the call. I'm telling you right now, SoFi is gearing up for the biggest refinancing boom that, we could ever imagine, guys. This is going to be absolutely huge. Now, I know on my Twitter, I've been talking about, the rate cut countdown, and that has nothing to do with the stock absolutely exploding, the day prior, the day of rate cuts. Guys, I'm talking about a 12 to 18 month bullish sentiment behind earnings growth on the stock. Does that make sense? So everyone that keeps telling me the stock's not going to do nothing that day, the market is pricing it in, it has nothing to do with that. It has to do with the next 1 to 2 years of earnings performance. That is what is going to adjust the SoFi stock. And guys, Anthony Noto, they think they're going for, 80 cents plus by 2026. Okay, that puts us on par for 800 to 900 million dollars in profit. Okay, so that is what we are betting on. Okay, we just saw Nubank last year hit a $1 billion profit, so that's pretty in line, close to each other, and that company is trading near 60-70 billion dollars. So that just shows you, if we get half the valuation on growth, this is a $35 stock in its sleep. Okay, so understand, guys, that is what I'm betting on with rate cuts, and that's why I'm giving you these countdowns, as an excitement, to be prepared for. It's not just for that day. It's to be prepared for the next 12 to 24 months, the bullish, outcome that's going to happen. So we're going to be listening to the Anthony Noto interview today. It's going to be very exciting. So drop a comment. What did you like? And I believe he's taken away opportunities for the bears to come out and, talk about delinquencies and stuff like that. So if you find any of this information useful, be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're going to be keeping you updated daily on all the breaking news with the SoFi stock. Let's get into the video. All right, guys, I want to keep it very simple. I just posted this. These are the big, opportunities that we're waiting on, guys. These are going to be moving the markets like crazy, and we're getting the countdown updated as of right now. I just did it 8 minutes ago, guys. September is going to be one for the books, guys. Take a look. We got the Noto Fireside Chat. That's 5 days out. The CPI report. This is the last CPI report before the first Fed rate cut. That thing's going to have so much impact on, what type of rate cut we get. And then we have the Fed rate cuts 14 days out, guys. Look at the countdown we are at right now. You already know my last couple of videos. If you've been following the YouTube channel, my price target is $14 by the end of the year. That's, 3 to 4 months of, these Fed rate cuts getting absorbed, a massive Q3 earnings, and a big 2025 guidance increase along with the Q4 solid earnings. And I know you guys love looking at the options chain, the open interest. We're going to take a look. We got the 9-6, the 13, the 20. This is this week right here, guys, the 6. This is on bar charts. If you want to look at it on your own, go ahead. We got call options jumping up to 119,000. When we were tracking these just last Friday, it was about 90,000, so it has jumped up dramatically. We got a nice cool off for next week, 44,000 open interest, and then this is the big week, guys, right around the Fed rate cuts. I think the Fed rate cuts is like the 18th or 19th, so this is the big week. I think they're going to smack retail in the face, destroy these options, and then look at this, guys. The next 3 weeks or so, we can absolutely moon after these options get destroyed. So we're going to take a look at what it looks like on, bearish or bullish. And this is what I came up with, guys. Take a look right here. I got us, an X, a caution for this week. We're up to 120,000. So this was an update yesterday. So it has jumped up another 10,000. A nice cool off next week. We could go a little bit to the upside. And this is the Fed rate cut, week right here. That's why I got a big X on it, 190,000. And then it could be smooth sailing, into the Q3 earnings, guys. So understand, short dated calls, you can get smacked in the face really fast. And that's exactly what they did to open up September yesterday. I think the NASDAQ touched 3.8% decline because Tom Lee came out and said he wanted a 7 to 10% decline. And then today we went off, a little bit like, 1%. So guys, we literally got a 5% correction in literally 2 days, 48 trading hours. That is absolutely insane. But understand, guys, these are the weeks you need to watch out for. This is this Friday and then 2 weeks out on the 20th. All right, guys, here we go. Anthony Noto live Cnbc interview. Drop a comment. What did you think about the interview? What did you like? I'm telling you, he dropped a couple gems for Q3, so the Bears don't have a lot of, opportunity. You'll hear those if you, listen to the full interview.
Credit card balances 60-plus days past due, hitting their highest level in more than a decade in the first quarter. That's according to the Philadelphia Federal Reserve. Meanwhile, the number of 401k millionaires reaching an all-time high in Q2. So what does this tell us about the health of the consumer and investing trends? Let's ask one of the biggest players in the fintech space, Sofi CEO Anthony Noto. Welcome back, Anthony. It's good to have you. What are you seeing?
Biggest players? CNBC was never given that type of love. That's because we're about to hit 10 million members.
On the delinquency front.
Well, Sarah, thank you for having me, and I appreciate coming on there. In terms of consumer activity more broadly, and then I'll talk specifically about the credit card business, consumer activity and sentiment is trending okay. And I think as long as the Federal Reserve cuts rates 25 to 50 basis points, that trend will continue. A couple of data points that we're seeing that should be instructive for the audience is what's going on with the Sofi member. Again, a Sofi member is a higher income member, higher credit, but it is indicative of some part of the market. We're seeing debit spend continue to be very strong. It was strong in Q2 and continues to be strong in Q3. But importantly, that debit spend is not coming at the expense of deposit growth, which also remains strong. The second data point I would share with you is in our invest business. We saw about 50% growth in net flows in Q2 in our assets, in our invest business, with a lot of interest in alternative assets, which we launched at the beginning of the year, but diversified investments like ETFs and robo. And we're seeing strong net flow growth again in Q3 as well. And then on credit cards, to your specific question, our portfolio is quite small. It's growing nicely. We are seeing improving entry rates into delinquency. We cited in Q2 that we saw a 20% improvement in entry rates into delinquency compared to 2023. And we're seeing continued credit performance trends in line with expectations in Q3 in credit cards as well as personal loans, which is a good outlook.
So when you see the market throw a big fit like we saw yesterday on worries that maybe they're not pricing the recession as much as, say, the bond market, what do you think? It doesn't sound like you're seeing any kind of big red flags.
Well, I'd say two things. One, we do have a higher income customer, and they also are higher in credit, so they're not going to be fully representative of the broader market. A subprime customer would be experiencing different trends, and even middle America would be experiencing different trends. But I do believe what we're seeing is a piece of the puzzle. If we don't see Fed action of 25 to 50 basis point cuts, then the concerns on the macroeconomic front will become a reality, and we will go into a recession. But I think the Fed understands the importance of the cuts that are coming. I hope they move with 50 basis points. It gives them more optionality. It'll be more impactful to corporate America, and it will definitely be more impactful for the consumer. And I think waiting to move that amount could be taking more risk than is necessary, given where unemployment is trending and given where we're seeing things like Jolt's report today.
Hey, Anthony, it's Carl. This week, the Journal did a piece on Americans and how good, the Journal argues, they're feeling about their 401ks. We've seen the number of million-dollar 401ks at Fidelity. I wonder how you think your consumer is thinking about their equity gains and how reliant they are on this so-called wealth effect. What would happen, for example, if we had a severe correction?
Yeah, so far, we're not experiencing spending due to a wealth effect. We're seeing spending based on income. Debit spending and deposit trends are the first indication of that. If asset growth slows, then we'll, in fact, start to see some risk in debit spending and deposit growth. But right now, asset flows have continued to grow as people have gotten good returns, both in their 401k and their discretionary investing as well. So think of it as a ladder effect. First, net flows will slow and go negative, and then you'll see a decline in deposit growth and then a decline in spending. And right now, we're actually seeing an improvement in net flows, improvement in deposits, as well as spending.
And have you seen any early indications that homeowners with a lot of equity, and there are a bunch of them, are interested in tapping that if they need to in the next year or two?
Yes, absolutely. The day that we had the yen carry trade disruption in the marketplace, where we saw rates drop significantly, we saw a doubling in our mortgage locks per day. Now, our mortgage business isn't huge, and that trend wiped away the next day when rates went back up, but it is indicative of the amount of pent-up demand that is out there for home equity loans as well as refinancing. The amount of increased demand that we saw in that one day is a clear indication that people are waiting for the opportunity to refinance their homes. They're also waiting for the opportunity to refinance their student loans. We saw increased demand a couple days there as well on the back of that yen carry disruption. So I do think if there's a 25 to 50 basis point cut in rates, it'll be very beneficial to those that need to refinance, for those that have equity in their home and can take some equity out at a lower cost. And then don't forget the people that have bought their homes with ARMs that will be adjusting each year. And so a 50 basis point or 75 basis point cut going into 2025 could be really beneficial to the individual consumer. The other thing I don't think gets talked about enough is, what are corporations thinking right now? What are they doing right now? Well, they're doing 2025 planning. They're thinking about their hiring plans for 25, their technology spending plans for 25. If they could lower their interest expense by 75 basis points with that amount of rate cuts between here and next year, they're going to go in more optimistic on spending, which will help our economy and hopefully help unemployment as well.
I just wanted to ask you about student loans because it's part of your business as well, and it's this political football, right? Can you just tell us where we stand in terms of student loan forgiveness and expectations by borrowers of student loan forgiveness and how that might change after the election?
Sure. First, just for the viewers, the company was built on the back of student loan refinancing, but now it's a very small part of our business. And in fact, in Q2, lending overall fell to only 55% of our revenue, where tech platform and financial services increased to 45%. And we expect by the end of the year to be 50-50 revenue split. So it's a much smaller piece, but it is a big opportunity for us. If rates do get cut and there is some clarity on the student loan reform, which I think there continues to be, there will be a lot of demand for refinancing student loans. I don't believe the president's desire to forgive student loans outside of those areas where people have been harmed or misled will be successful. The Supreme Court has ruled. Other politicians are firmly against it. It's unconstitutional for the executive office to make a decision as it relates to student loan relief, and it would have to go through that congressional process, and there's just not support for it. I think right now consumers are being confused by the rhetoric that's really about the election and getting more votes. But as rates come down, they should refinance if they can save money, because there's no frictional cost to refinance their student loans. There's no fees and there's no prepayment penalties. But they need to be very cautious about any belief in student loan reform and making sure it's very clear and it's certain before they make decisions.
All right, guys, that was such a great interview. You probably need to watch it 2 to 3 times to get the full grasp, every little detail that he said. But like I said, guys, he put the pressure on the Bears, talking about delinquencies for credit cards and delinquencies for personal loans, trending in the right direction, debit spending up, and also deposit growth extremely strong. You can see, Anthony Noto wants a 50, basis point rate cut, for the overall, environment, the stock, refinancing, the economy. He truly believes it's going to be better. So guys, drop a comment. What did you think about that video? I'm extremely bullish. Like I said, guys, I'm ready for these rate cuts. We are literally, less than, 2 weeks away. Some very exciting times. Drop a comment, smash the like button. Don't forget to subscribe to the channel. We're going to be keeping you updated daily. Once again, my name is Kyle. Hope you have a great day.